Everybody, welcome to week 282. And yeah, we're all coming from different directions today. And so Adam is up in the mountains at our Hendersonville office. Jack is dealing with a family emergency, and he just texted me it'll be okay. So that's a good thing. And then we have Bryant Trombly from Destination Wealth Advisors jumping into the ring of fire or into romper room with us. So be easy on him, Papa Joe, if you're on here or anybody else. You can harass Adam and I in the chat, but go easy on Bryant because we'd like to have him back. And, we've had his colleague on here before as well, Austin Palmer, who did a great job. And he was nervous as a Nelly, coming on here initially, but he did a great job. And so it's always good to have Destination Wealth on here because we do have some stuff to talk about. There are changes coming down. Um, oh, hey, Joe. There you go. What a ringing endorsement. They have taken care of me extremely well. I can echo those same sentiments. They have been incredible, and I've had and actually owned other RIAs that I can't say the same for, but I could say it with these cats. So thanks for popping in on that, Joe. Um, oh yeah, it's been roller coaster. Well, I mean that's the markets, right? So the markets are crazy. I bought Tesla low, and it's going up again, which I'm really excited about. But they wouldn't let me. I said, hey, I know this is an emotional decision. Just put a little bit in there, and they didn't let me buy much, but they should have let me buy more. Anyway, so before we go into changes in the IRS with the IRA and 401k contributions and limits and all kinds of stuff that are coming down the pike in 2026. Adam, I know you've probably got some things on your mind that we can go ahead and jump into if you want to first, and then we can also deal with some tax stuff. But we want to give Bryant, some light of day. So thoughts?
Um, yeah, I'm sorry in advance, Gary and Bryant, um, and anybody listening. So,
Uh-oh, brace yourself.
look, I'm not going to sugarcoat it. Regardless of where anybody lands from a good idea or bad idea perspective,
Yeah,
uncertainty sucks
yeah,
ass,
yeah, yeah.
and it leads to not doing stuff. So I'm just going to relate a story so basically this is just all about, hey, 2026. I mean, it's kind of like, you know, same sort of deal, expect a little bit of growth, but it'll probably be slowed. Hopefully we'll get some certainty, but the reason for the slow growth actually is, in my opinion, self-inflicted due to uncertainty. And I'll give you like a good example of that. With three three client conversations that have happened. Actually, two client conversations, but with one it was about two different subjects. One, and I didn't check to see if he's on here, but it'll remain anonymous anyway. But it's someone who deals in business to consumer type stuff. And yeah, you can write all that off stuff, Joe. Hammer down. But he deals in consumer type stuff, business to consumer type stuff. And that's a tough space to be right now. And you keep on hearing about, all this investment and research and development and that's going on, and it's a little bit related into what we're getting into the conversation today with Brian about in terms of side questions. But most of the R&D has been in AI and AI related stuff. It's not in general consumer products. And if you kind of think about it, like, I wonder when the last time a brand new consumer product was released. It's like not in a while. you know so that But if you're a big consumer products company, your thinking is, well, look, while consumer confidence is in the shitter, why am I going to invest in releasing new products? So you sort of see the downhill stream there. So they're kind of just figuring out, okay, well, what do we kind of do and what do we do next? Um, but that all has to do with uncertainty because a lot of what's driving consumer confidence is the economy, regardless of like what data says or doesn't say. I mean, I feel like, the Biden administration said, Gary, you're an idiot. The economy's just fine, and Gary said, no, it's not. And now the same thing's happening. Gary's still saying, no, still doesn't feel great, just telling you. So in other words, you can't tell, like, you can convince me something's bad by telling me it's bad, even if it's not, but the converse is not true.
Yeah.
Like you
Yeah.
can't tell somebody that something's good and then have them believe it. So it's like it doesn't work that way, So that's just human psychology. So you're welcome, Trump administration, for that nugget. So the second conversation was with a client that specializes in consulting to banks, and it wasn't Joe. um, this company had been in the desert for years because just as the banks were working through, rewriting their own practices, due to the mortgage crisis and all that kind of stuff. Then the pandemic hit, and they basically, banks shut down, can't meet with them, so it's hard to sell consulting services. So this year they're having a banner freaking year from a consulting standpoint, and what they consult on how banks can make more money. Well, I jokingly said to the owner, yeah, probably the reason you're making more money is because banks aren't lending. So they're not making any money because they're not lending. So then you have to look for other revenue streams to be able to make money since you're not lending. Here, hence the consumer confidence piece again. And he joked and said, and this be a good destination prospect, by the way, Bryant. He said, yeah, I've got $17 million with Merrill Lynch, and I couldn't get a mortgage on my house with Bank of America.
Really?
Yeah, yeah. So like, and this company is
What?
having a record year from an income perspective, like as good as they've ever had in the history of them being a client, which is a lot. So
He needs to call Movement Mortgage. I'm just saying.
no, he's got it covered. It's just like that's the nonsense that is occurring right now due to self-inflicted uncertainty. In other words, like even if it's going to be bad, at least make it freaking certain, like because I can't plan off a tweet. So it so that's just a long way of saying like, you know, uh, the analogy that I used with our team was, you know, hey, you got 40 years in the desert, like you can choose to not go on the journey anymore, or alternatively, kind of plan on you gonna need to ration some food and water, and
Yeah.
find other food and water sources until this all gets figured out. At the same time, I'm actually very optimistic that certainty, absent AI bubble, in the stock market, certainty actually fixes all this. you know, and it and
Yeah.
it's it and it's actually very easy to have certainty. Tell me what the hell the tariffs are, and tell me what the immigration policy is. Bam! all uncertainty cured. Anyway, that's my soapbox, Gary.
You did good. Okay, we've got an AI assistant. That's really good. That has joined us. But yeah, so yeah, you can write off your boat, plane, car, beach house, dog. Not the cat, man. I'm sorry, but cats are. I mean, it's a
Cats are cat.
liability.
Yeah, they're worthless. So there you go. Anyway,
Yeah.
yeah.
But so I do take issue with one thing that you said, only one thing, and you said there's not a lot of R&D or new product development going on in the consumer space. And Christmas is coming up. So here is the thing. So it is a product and it's packaged and it says it's nothing better than something. And it's packaging that has nothing in it.
Yeah, there you go. Yeah, that's
It's
right.
like the
Yeah,
pet rock.
yep, perfect. Yep, yep. Gary, I'll put your chia pet in it. There you go. You're
There
welcome.
you go. Yeah, it's flat, so there you can't put anything in it. Like it probably has hardly any air in it, So anyway,
Yeah.
it is nothing. So Bryant, first of all, everybody welcome Bryant Trombly of Destination Wealth Advisors. And Bryant was a Merrill Lynch guy, and I'm going to just give a little plug for him. It's not solicited. I embarrass him every time I do it, but I'm like, um, my wife said about these guys at Destination, this is the first group that I feel like they actually know what they're doing and they speak to where I actually understand what they're doing. And they'll even send us a little video that says, hey, Gary and Jennifer, here's what's happening in the market. Here's where we have you guys. Stuff that the handcuffs could not allow Merrill Lynch guys to do, which I really appreciate that. And they have outperformed the market in ups and downs. And we've seen ups and downs since we've been with him for the few years that we've been with him. But nonetheless, I know he can't say that. There's no guarantee of past performance and future results. I'm just going to say that. I did have my securities licenses at one point, but I'm really happy with them. And a lot of it has to do with communication and just like they have a team approach, which I really appreciate. But Bryant was talking in the hall last week because he's very involved with like he and the team are very involved with us from our tax strategy standpoint. And even if folks have financial advisors that they're happy with, these guys are not territorial. They play well with others, and they do bring a wealth advisory perspective in the tax to our tax strategists as well, which is an integrated approach, which is a novel thing. Shouldn't be, but it is, and I really like it. So he was in the he was in the house last month, and they were talking about some of these changes happening in 2026, and I'm like, wait a minute, that affects me. So tell me more, Bryant. So let's dive into some of this stuff that you've teed up that I think our business owners are going to be well versed in after you're talking with them about it. So take it away, buddy.
Yeah, definitely. Thank you for the glowing intro as always, Gary. I'll echo the only two things I'll pick on the Wirehouses for is that communication issue where, they get to limit how and when you get to communicate with clients. And the other one you
Yeah.
talked about it is that tax aspect, which is driving this discussion today. So it's great to be able to really dig into the tax side and work with you guys closely on it. And this kind of dovetails off of what Adam was talking about also with, when they put out new rules and how do we adjust to, the certainty of the rules, but also a little bit of the uncertainty around how they're going to get applied. Um, yeah, so recently the 2026 planning limits came out from the IRS and Department of Labor as it covers 401k plans and other retirement vehicles. And the biggest change this year is call it the 5150 rule. So if you're over 50 and in that catch-up phase, but you're also a highly compensated employee, all those wonderful catch-up contributions that you could make and are probably making each year as pre-tax deferrals now are mandated that they're going to have to go in as Roth 401k um, contributions. So that takes away the ability to do that extra amount into pre-tax deferrals.
So give us the amounts on that.
Yeah, so for 2026, we have a base employee deferral ability of 24,500. So that's up $1,000 from 2025 limits, 23,500. And then the catch-up contribution is moving up to 8,000 from 70. $7,500 limit. Now, one of the ways that I'm kind of looking at the disadvantage of not being able to do pre-tax for your catch-up contributions, if we're comparing it to 2025, because we're getting an extra $1,000 in our base employee contribution limit, it's really only about a $6,500 disadvantage than it was in 2025, but it's still meaningful for high earners. You can kind of earmark that, these might be taxed as high as, 40% all in. So, that's going to be kind of a meaningful increase to someone who's used to, maxing out both their base employee contribution and their catch-up contributions.
You Wait a minute, Bryant. I'm struggling to get this correct. You mean that exchange for getting a tax cut, I actually had a tax benefit removed?
Yeah, it's funny how they kind of do that to you.
So it was all a shell game? I've
Yes.
never heard of that happening before.
Yeah, yeah, a little tax hike on savers and earners.
Yeah,
So the
no,
catch up now has to be, and oh, talk about the 61 to 63 or 64 or something. There's another little provision in there too.
Yeah, and let me pull that up. So if you are 61 to 63, you get an extra catch-up contribution. Which put me on the spot with that one, Gary. I got to pull up those numbers again.
I thought it was like a couple grand or something like that.
Yeah, it's like 1,250 on top. Or maybe it takes you 11,500. Let me look that up for a second. Um, But yeah, so that is also going to have to be a Roth contribution also. So kind of, the issue with this is twofold. One, it's a personal planning issue because if you were taking advantage of doing those catch-ups, you were going to be able to defer taxes on that by doing it pre-tax. The other, probably pretty impactful for this group, if you're a business owner, if you're a plan sponsor, so you're running the plan for your company, you've got to take a look into it and make sure that the plan rules are actually going to kind of allow you to, be able to facilitate these new regulations.
yeah,
It's not.
meaning if you did not have a Roth feature, you would have to have one, right?
Yeah, so you actually are going to have to kind of dig into your plan documents and make sure that, yeah, you have the Roth feature because if not, then the 50 plus catch-ups, you just can't make them at all for employees. And the other one I think is going to be a little bit more difficult is the juggling for people that are right on the edge. If you're trying to play a game or making sure that you're staying under that limit, there's not a lot of clarity at the moment about how to go ahead and rectify. Let's say you have someone making 135, big end of the year bonus that pushes them up, or whatever it might be. I think there's going to be chances where you have employees that are straddling the edge and wanting to take advantage of, hey, I'm below that highly comped level. I'm looking to do it pre-tax, but oh no, I got bumped up, above the limit. Now all of a sudden, how are you going to go ahead and recharacterize those contributions to the correct type?
And how, when you've seen, if I'm a business owner, Brian, if you just think through, because I mean, there's other changes to 401k plans in here too, in terms of like the contribution rates and stuff like that, and the enrollments. How, like in the past, when there have been changes like this, how much can I count on my payroll administrator or sorry, not my plan, my 401k plan administrator, just you guys got me covered, you'll change the plan documents and you'll take care of all this, versus like, no, I actually really do need to take this crap seriously because I'm responsible, for it. Because the Department of Labor it doesn't get super happy when you screw stuff up. Like the penalties for screwing stuff up with the Department of Labor are draconian, to say the least. Like, I mean, there's basically, cocaine dealers and then people that screw up 401k plans. Like it's somewhat co-equal in terms of the penalty.
That is the way that they view you if you have a misstep inside of it. Yeah, so in terms of what proactive things your plan administrator is probably doing, that usually tops out at you got an email sometime in the last 3 weeks saying, "Hey, there's some changes coming in 2026. We want you to be aware of them. Reach out to us." That's really the extent that we're seeing the plan administrators going ahead and addressing this with their individual plans. I think part of it's volume. There are hundreds of thousands of plans out there, all falling under this same rule. I don't think a lot of the record keepers and administrators have the workforce to go ahead and track down, commitments from every single plan sponsor to say, hey, let's make sure we're making all these changes and getting everything all set. So from their point of view, it's really just putting out an awareness that there's a change and it's going to be on that plan sponsor and
Yeah.
their team.
If you not to belabor the point of like, hey, this is just yet another thing that's like, I don't even know how you would implement that. It's super complicated. Using your specific example, Bryant, if I'm an employee, I'm in charge of designated how I want my 401k set up between, pre-tax versus Roth contributions, assuming that I even have that as a plan offer. So like I'm filling that out directly with John Hancock or like whoever, is administering the plan, right? So I set that up. I'm making, 130 some odd $1,000, right? And I'm like, and I'm doing my catch-up contributions, you know. Then I trip the limit like you just said. Um, like I don't and nobody does anything about that. You know, what then ends up happening is that, when the plan tax return has to be filed, they do or if you're big enough, the audit happens, they do some analysis of like, where'd you screw up? And now all of a sudden you've got a list of 30 employees where you screwed up as the employer, you know. And by the way, you know, here are all the problems that that's created. And here's the worst aspect of all this. Gary's W-2 is now wrong, right? Because he should have paid
Yep.
taxes on the money that went in. And now I get to
Hmm.
go back to Gary and say, hey, dude, I'm gonna have to amend your tax return and or you're gonna have to amend your tax return and you're gonna owe some more tax. Gary's gonna say back to me as the employee, that is your fault. And how are you going to make this right?
Yeah.
Yeah. Right
So
now,
like if you just think about like I know this kind of sounds like that not a big deal, doesn't apply to me. I'm not too worried about it. Blah 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 blah. This is interesting stuff. I'm now multitasking. It's like no, like that's literally what will that's actually the likely outcome. you know that will happen if you don't get on top of this. you know
yeah, I'm 100% with you from a plan sponsor point of view. So in essence, that's usually the business owner who's the one signing off on the 5,500 for the plan. It's probably going to be a bigger employee problem than a personal planning problem because our recommendation would be you're going to want to look at every highly comped employee over 50 on your employee census and basically kind of coach and get a game plan with them. What are they choosing to do? Is there a likelihood that there might be an issue? Are they on that around that line where it could be an issue? And then as far as current guidance for how to do the corrections, it's like you said, the first is if there's time to correct the W-2, they're saying, do a W-2 correction, payroll, all those elements. But the other one, if there's not, is to do force a Roth conversion within the plan for the employee. And that's going to generate a 1099 in a taxable situation for them. So yeah, I think in either case, you are going to run into the likelihood of having, some unhappy employees if it's not something that's planned for ahead of time.
Yeah, and again, if you just go back to like the practical application of when you will even know this, you're not even going to know it until like the summer after the year's already elapsed. So Gary's already filed his tax return.
Yeah.
You know, he already spent the refund check, so this is not, it reminds me very much of one of those, I should have been collecting sales tax and I wasn't. What are the odds I'm going to be able to go back to my customer and collect it? No, I'm actually just going to take it in the pants and have to pay it, and that's just not, you know, that's not going to feel very cool. You know?
So this is a jump ball to both of you guys, and Papa Joe asks a really interesting question, and he says, "Hold on here, let me get it up here. I just lost it. Uh, Basically, what's the percentage of people that are self-directing in their 401k, their investment options versus, you know, letting somebody else select for them?"
Um,
Yeah.
well, go ahead, Bryant. You're a better one to answer that.
Yeah, I was going to say, I think it needs a little bit clearer of a definition too. So you kind of the two levels where you're going to have your standard, 401k plan, 12 to 24 different choices inside of it. And someone's hopping in, picking from that kind of curated fund list, as opposed to doing something like a target date fund. I'd say the target date funds are the most common for employees to use, but as balances grow inside of plans, people tend to either themselves or, with some guidance, pick kind of a tailor-made portfolio. Beyond that, there is the ability, going back to plan design, to use some record keepers that do allow the full open architecture, self-directed, um, non-limited list of stocks and funds. It's probably the most powerful in terms of tailoring it specifically to what's going on in someone's broader financial picture, but also by far the least common. A lot of plans aren't set up that way.
Yeah,
Yeah,
just so you know, Papa Joe, I keep my investment portfolio tied into whatever these guys say. And then I go, hey, what do you think in these options that are available in the 401k? What do you recommend? And it's usually date range.
yeah, and to that point, I appreciate that you provided the clarity, Brian, between self-directed really having two definitions. Self-directed meaning like I'm still invested in the market via a basket of available options versus like actual self-directed, like I own a rental house in my 401k, which is what we kind of think of when we think self-directed. It is, those latter options are pretty rare. Not it's not that it's not that we wouldn't advise them. It's more that you got to double down on the rule keeping on that. Because you go
Yeah,
back to the
yeah,
IRS thinks you're a cocaine dealer. What the IRS assumes when you have a self-directed IRA is that you just bought your primary residence in it. Versus like an actual rental house. And again, I'll give you, so just, you know, they're interesting options. Like a lot of people use those to hold alternative investments. Like, hey, I want to invest in, a brewery startup, so can I do that in my self-directed element of my IRA or 401k? Yeah, you absolutely can. And those are, perfectly acceptable. It's just you got to be super careful about the rules. Meaning like you better not also be an employee of said brewery because the IRS's position would be, oh, you just use your retirement money to pay yourself, you know?
yeah. just so you guys know, I put in a chart that I had found, thank you, Chat GPT, um, to kind of address this thing. So, um, to keep it simple, if you're under 50, whether it be 401ks, 403bs, 457bs, governmental 457s, et cetera, you're at 24.5 under 50. If you're 50 to 59, you've got that $8,000 catch up that he was talking about. If you're in I'm in this range because I'm 63, the super catch up, if permitted, is 11,250. So that's an extra 3,250, but that all is now going to have to go to Art or Roth. And then the max, so together that deferral for somebody in my range is the 35,750. But then simple plans, it's interesting too. The simple plans are 17,000 elective deferral plus a 4,000 catch up plus a 5250 catch up if age uh, 60 to 63 applies. So then you're at 22.5 or 22,250 in the super catch up, or 50 to 59, you're at 21 grand. So interesting. And then traditional IRAs and Roths, 7,500 is the annual contribution limit. Then there's an 1,100 catch up for 50 plus. And then there's no separate super catch up for the old codgers like me. So anyway, you can check that out. I put it in the chat. Um, Thank you for the granularity of this, Bryant. Um, if somebody wants to reach out to you on this particular subject or anything else that we're going to be talking about, how's the best way for them to reach out to you?
Yeah, email's probably the best. Gary, you'll know the best way to kind of get that out there for anybody.
All right,
Feel
yeah,
free to.
I'll put that out there.
Perfect.
Uh, all right, so let's move on unless somebody has any questions more about this particular aspect. Talk to us about anything else that you see from a regulatory standpoint that you think is worth noting, or does this pretty much cover it?
Yeah, I would say, this pretty much covers it for this year. These are things that do change every year in terms of the limits, but the type of contribution change with the Roth is, unique for 2026. From a pros and cons standpoint, though, it's always great to get funds into Roth accounts, whether it's an IRA or 401k. A lot of people that are maxing out are going to be doing that, backdoor Roth strategy. We do that with a lot of our clients to get those non-deductible IRA contributions into Roth wrappers. So, on the face, while, people are going to be paying more in taxes now because you can't do the pre-tax. I would still advocate for, plowing your max into your plans, going ahead and accumulating those Roth assets. They're great for, planning for income in the later years of retirement because it's going to give you the longest time to let them grow. But they're also the most advantageous or one of the most advantageous accounts to pass down to heirs. So you can always think of it as a legacy planning play to continue to grow those.
All right, so I'm putting Bryant's email in the chat to everybody, so grab that before the broadcast is done. Um, Adam, because I'm going to toss it back to you, Bryant, here, specifically talking like give you a little heads up, talking about AI bubble, Bitcoin, not asking you to be the great Karnak of Johnny Carson, and we are not asking for uh, investment advice, but we would like to see like what are the general things that you're seeing in the market and what you're hearing and anticipating. Um, but so while you're thinking about that, Adam, is there anything else from 2026 from a speculative standpoint or known standpoint that anybody listening should be buttoning up and tying in right now before December 31 hits?
Um, you know, not not really. I think the only other thing that I was looking at related to 401k plans in preparation that this might have been part of the Secure Act. I don't remember when it came into place, but there's something about there's been an automatic enrollment for new hires thing for a while, and what I was looking at is, hey, unless you take action otherwise, that enrollment rate is supposed to increase every year up to 10%. And to me, that's like another thing where it's like, I wonder how mechanically that would even work, and you could see sort of like the same sort of bad scenario of um, it's the end of the year. I did not correctly implement Gary's enrollment rate. Technically, that should have been Gary's money because it's his deferral. He's like, go screw yourself, Adam. And not only do I have to do the catch up out of my pocket because I'm not going to lose Gary as an employee, but I also have to do a catch up on the lost growth. So this just all seems like very, very difficult. So is there anything that you know about that at all, Bryant?
Yeah, so there's a couple of different ways to address it. Everything from, hey, your payroll person, office manager has a little spreadsheet that they're keeping because that's what they got to do is hop in and do those enrollment increases. One little trick that we've been doing for new plans, and you can put this into place for any plan, if you go ahead and go back and amend the documents, but you have to do that step up until it reaches 10%. So if your auto enrollment is set at 3%, then you have 7 years of annual step ups that you would have to, keep track of and go in and implement. You can pick any percentage that you want when you institute your auto enrollment. So we've got a couple of plans that are auto enrolling people at 10% simply because most employees are going to get in, they're going to make their own election. If they make their own election, it automatically takes them out of that auto enrollment group. So, they've made a choice. You don't need to step them up anymore
Yeah.
because they've gone and done it. And if they just take the auto enrollment, hey, they're saving a great amount. Like it's good for them. If they opt out, they opt out. So it's kind of a little bit of a backdoor plan design way to say we're going to put something in there where we're never going to have to be responsible for those auto increases.
Yeah, that makes a lot of sense. All right, now you get to be Karnak. Fire it away, Gary.
All right. Yeah. So I want to talk about the AI bubble in particular first because I was talking with an AI guru in town a week ago in our offices, and she said what she described sound eerily similar to what I experienced when I ran bizjournals.com in 2000, where you had these really ridiculous valuations that were going on pre-bubble exploding. And then she said that there's a company that will remain unnamed that had like a $2 billion valuation, and it's cratered down to in the hundreds of thousands at this point, and like below a half a billion. And the CEO and founder, their stock is worth, to them personally, you know, very, very small. I mean, it's not $1 million. It's not even $100,000. So for what was a $2 billion valuation on what seems to be hope and a prayer.
Yeah, so I would say it's an interesting story. How you hadn't shared that yet. That shows a probably healthy market that it is, identifying those wildly mispriced and misvalued companies at the current moment instead of us getting to some, peak or crescendo where all of a sudden we realize there's nothing but smoke and mirrors behind all of
Yeah,
this.
yeah.
So I would take that as a big negative for that company, but a positive for the the broader market when it comes to the AI space.
Yeah, so what are you seeing as far as if from an appetite of investors? So I can talk about one client that I brought in as a tax and other services client. They had a financial advisor that was with another firm. They really liked that financial advisor. He's a great guy, but very, very limited on what they could offer. And this particular investor and client wanted to have Bitcoin, and they were prohibited from doing anything with that. Um, and so they came to you, and we bifurcated like, all right, this is out of bounds for our guys, and this is within bounds for our guys. And so they do play well together. I'm just saying. But from an inquiry standpoint or like an interest standpoint from clients that are existing or new clients coming in, are you hearing more chatter about the Bitcoin world and even things like AI that would be more, kind of esoteric versus kind of the fundamentals? Or are you hearing less, and what kind of guidance, or red flags or green lights are you throwing up there?
Yeah, I'll start with Bitcoin. I would say interest in that has definitely cooled off, which is probably not a negative. It's probably a neutral to a positive for the asset as a whole. It's actually, I find it funny that I'm describing it as an asset now, where, 3 or 4 years ago, it's like, yeah, nobody knows what that is.
Yeah, right.
It's an algorithm. It's not even a thing. Um,
Yeah.
so, currently with Bitcoin, the way I'd sum it up is it seems to have matured into a type of, we'll call it digital gold. Not seeing the expectations that you're going to put in 100 and walk out with 1,000 anymore. Its correlation is really tracking just the overall risk on, risk off appetite for the public markets. So I find myself watching Bitcoin to see, hey, are we going into a risk off week or an uncertainty week or something going on where, if I see that Bitcoin's dropped six, seven, $8,000 overnight, well, we're probably going to be down in the NASDAQ and S&P 500 and, those types of, kind of risk on assets next morning. And, everything cycles. There was a time where the market and oil had a, 1-to-1 correlation that broke after 18 months. We're just in a period right now where we're really seeing that with Bitcoin. Um, but beyond being that, risk on, risk off driver, still don't see a big use for it. There's not a lot of people transacting in it. Um, some of the concerns might be with the liquidity of the transactions, and you never know if some big Bitcoin exchange is going to go down or there's going to be a tangential issue that really rocks the price.
Yeah, it's really interesting. I mean, Bitcoin, I've got a buddy that was an early Bitcoin guy, and he's a big tech guy. And man, did he make a boatload. But he also bemoaned the fact that he sold when he did. I'm like, dude, but to see swings from 120 plus thousand bucks a Bitcoin and it's at 92 today. I mean, that's a wild ride. Papa Joe talked about it being a wild ride out there at the beginning of this webinar. Like, that's a wild ride. I think if you want to like lose your cookies, just put everything in Bitcoin.
I would say that probably the biggest change with it over the last, let's say, 18 to 24 months is like you were mentioning, there is the ability to access it through more traditional investment vehicles. So there are exchange traded funds that hold Bitcoin, just like there are funds that hold gold and other commodities. Because of that iteration, and I saw the Clark Griswold thing, I'm like, what's that? Um,
Yeah, that Papa
The,
Joe.
I, yeah, I would say for those interested in getting exposure without wanting to be exposed to all the volatility, there are some novel investment vehicles that don't do anything crazy, but are able to give exposure with some buffers around it. So when I'm talking to clients, whether it's something that we're actually moving into or just hypothetically, we're usually talking about those types of investments where we can have some guardrails around it and just treat it like another commodity. Hopefully
Yeah.
at some point it's a diversifier that's zigging when the rest of the stuff is zagging.
Yeah, I even saw, and I've been hearing occasional ads from Grant Cardone where he's got real estate and Bitcoin bundled together, which is really interesting. Like now, I'm not investing with Grant Cardone. I'm not saying you should or you shouldn't. I'm just saying I thought that was an interesting mashup, you know, something tangible and something not so tangible. But
That harkens to probably 3 years ago when we saw those companies. There was a beverage company, I want to say out of Long Island, that put blockchain in their company name. They were a listed company and Long Island is like Long Island tea or something. They became Long Island Blockchain Company because they were going to apply it to what they did in their beverage production. And it was
oh,
crazy.
interesting.
Yeah, it shot up, it crashed. I think that show, I think it's a good thing to compare to with AI. So, things like that, I don't really, we can't use blockchain in our lives. Small companies aren't switching the way they do inventory management to blockchain technology. There's huge efficiencies and stuff in it, but it is so hard to access. I've got
Hmm.
a master's in information technology, and I am not going to go into blockchain stuff. But with I think everyone, I mean, we've already doubled your viewers with AI note takers.
Yeah,
So,
for sure.
I
Yeah.
think everyone is really kind of starting to move into that space in a very applicable way, which makes me, more interested in its, broader long-term future prospects than, some other technologies or bubble-ish things.
Yeah, that's good. Just as you're looking into 2026, we talked at the very outset of this thing with Adam talking and railing about uncertainty, which I get it. Um, what are you guys seeing, Great Karnak? Again, not giving investment advice, but trending. Are you seeing more optimism and growth? Are you seeing a bear lurking at the door? Like, I'd be curious as to like your take.
Yeah. No, I love talking about, bear prognostication and black swans because almost by definition, you're not supposed to see them coming. So the people that spend hours pontificating about them, I always find it funny.
Yeah.
So I would say, our view is probably more optimistic and it's, the coiled spring type situation. And it really goes to what Adam was talking about at the beginning. There's so much pent up possibility that has been continuing to be weighed down by uncertainty and by the unwillingness to kind of move to that we're going to go spend, we're going to go risk on, we're going to go invest. As that continues to sit, one of the things that we look at fairly often and over a number of years is things like assets and money market funds. You can get on the Federal Reserve site and they publish that in their Fred data series, and it's at $8 trillion right now of that's kind of that cash on the sidelines aspect that you hear people talk about. Um, and that is something really interesting to look at is what could possibly unlock those funds across, retail and institutional investors, where there's all of a sudden an appetite to to go and deploy that, back into, public markets, but even, private investments are growing so much as we see banks, step out of that area. So I
Yeah.
think that is definitely a potential for a situation where we can just get a set of rules for people to play by. And I think at this point, people would take any set of rules.
Yeah.
Yeah.
Well, just remember, Christmas is coming. Get your it's nothing, it's better than something.
As a parent, I'm thinking that's one less toy that we'd have to pick up off the ground. I'm telling all the grandparents that that's what
Yeah, yeah.
what my
Don't
girls
throw
will
away the
use. Yeah.
package because that's it.
Yeah.
Uh, well, hey, while we've got just a couple minutes left, anybody have any questions? Stump the chump, either Bryant, Adam, or me. You could stump me pretty easily, but Bryant, Adam, going to be a little bit tougher. Um, feel free to hit us up. And by the way, just as as a bit of a teaser, I think we are going to have, hopefully next week, it looks like, kind of the battle of the red and the blue. And I'm not talking about NC State and Duke. I'm talking about the Dem and the Republican lobbyists for Shoemaker, which is funny. Like, same team, just different color jerseys, which is hilarious. And those guys are really good. But I really am interested in hearing what they're hearing about, and what they're hearing and seeing on Capitol Hill about, budget. Because, like, okay, we made it through whatever 42 days or however freaking long it was on the shutdown, but we're still not out of the woods. I mean, we still haven't found people where they're um, clasping hands and singing kumbaya and saying, hey, if you mix red and blue you get purple. So they're not wearing K-State paraphernalia yet. So um, it'll be interesting to see what happens with that. But I'd love to get their perspective. So kind of tee that up mentally. It looks like pretty good that we're going to have those two guys on next week. They've been on a couple times before, and it's always interesting kind of for the throwdown. And they behave civilly and all that, which is like great. I would hope that we would have other adults that are much older on Capitol Hill that behave the same way, but they don't. So anyway, but yeah, like Joe, this is not an investment and advice, but I'd say go short term, go heavy into the utilities for the Clark Griswold effect. Like right now, while everybody's like hitting up all the lights, go in it, and then as soon as that's done, then get out. I'm just kidding. Um, Information. So from Jacob, based on comment you made at the beginning of the call, I know two retired people in their 60s worth 10 million that couldn't get mortgages 5 years ago or now. Like, what's up with that? I mean, if you can't get a like, why? I guess that I
I
don't
mean,
get it.
the answer why is that, like, if I went to Bryant and I said, dude, my house is paid for, blah 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 blah. I'm good. I don't have a whole lot of living expenses, da 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 da, but I don't want to pay taxes. He's going to
Uh-huh.
put me in a portfolio that doesn't generate taxable income. And then all of a
Yeah.
sudden, if I see that mortgage rates are down at 3%, but my money's making 8, 9%, I'm like, I should get a home equity loan. Well, the idiot at the bank says, but sir, you have no source of income. It's like, well, what do you like? I'm just not generating taxable income in my portfolio, but like, look at what it does. Like, I could buy this
Right.
house in cash tomorrow, but that'd be a stupid decision. Like, it's just, it's, it's, it's ridiculous, is what it is. Like, it's just, it's freaking ridiculous. Like, we've had clients that have offered to pledge the asset. Like I'll deposit the money in your bank. Like in the case of Merrill Lynch, this guy, Merrill Lynch and Bank of America, it's the same freaking company.
Right.
Yeah.
Like, that should have been a no-brainer. So the answer to that is like there's no actual good reason for that other than just pure stupidity, which is not a good reason. It's just that it's stupid, but I didn't make the rule.
Yeah. Floating rates
Like
guaranteed
there's
by assets.
Yeah, like there's no let me be clear. There's no regulatory requirement that says that the retiree couldn't get the loan. Like there's no, the Fed isn't saying that,
Yeah.
HUD isn't saying that, FHA isn't saying that. Like there's no regulatory requirement that's going to get the bank put in timeout for that. They're just not doing it based on their own risk policies for whatever reason they're not doing it, which is stupid. I mean,
Conversely,
if you think about it, this guy is going to basically Bank of America could have had the interest income off what probably would have been a $6 million mortgage and the
yeah,
fees associated with the closing, and they still would have been making their fees off AUM. And now you know what they're going to have?
nothing. It is
And actually, they have a
ridiculous.
loss because the money's going to be gone.
Right. Common sense isn't common.
Yeah.
That's for sure. Yeah. So anyway, I had another example, but I'm going to refrain. It goes
Yeah.
back into the 90s when I was at Bank of America.
Yeah.
So anyway, we are at the top of the hour. Thank you, Bryant. You did a great job, by the way.
Yeah.
Thanks for
Tell
inviting me.
Austin that you even did better than he did, and let's just see what the reaction is.
Yeah, that's right. That's right. All right.
That's a plan.
All
Thank you
right, you
guys.
guys, we're going to put this up on the BGW YouTube or BGW YouTube channel later on today for anybody that wants a replay. See you next week, Lord willing. Thank you again, Bryant. See you, Adam.
All right. See you
Thanks,
guys.
guys.
All right, bye bye.